theoretically not affect anything, although I have noticed that my CPU is affected, and then my system starts to get heavy, start to stream out. Okay, as soon as I see a confirmation that I'm streaming on the other systems, okay, got it. Twitch, and we're on YouTube, and we're on Twitter. I can close this down, come back to, okay. All right, so yeah, Carvana is doing good. I'm up 11% from 52. This stock is at 15% ADR, and today's catalyst might send it into higher ADR, although that would be just nutso levels. This level of 15% ADR is very good. Hello, why are you not showing me this chart? Chart's working. Chart's not. Let's try typing a different stock and maybe it'll come up. It's not rendering. Oh, there we go. Okay, good. Yeah, it is a bit slow. Doing so much. SMX, we already have that on watch. Okay, we've got a pre-market high almost breakout coming around 60. Basically 60 is the level. Just I gotta go check if somebody's knocking at my door. I'm hearing something. Could be like a next door neighbor just chopping something in their kitchen. I'll be right back. No, that's nothing. All right, let's continue to look for opportunities here. And amazingly, fucking bullshit, Carvana's not on my list here of gap ups this morning. See, this is just absolutely pisses me off about that scan. I'm going to take a moment, double check that scan, and then we'll go over the market forecast this morning. Let me double check this scan because this pissed me off. Okay, it's at least a penny. Volume is at least 40,000. So possibly, that could be it. Possibly it's using yesterday's volume because pre-market volume doesn't register. That could be it. Let me check if Carvana did not trade 40,000 shares yesterday, though, and I'm sure it did. It traded 38 million shares. Okay, so that's not it. That's not it. Ended hours. Average volume over the 10 period is greater than 10,000 shares. Crazy. Let me click scan right now. Is Carvana on there? It is not. That's just infuriating. Infuriating? I'm infuriated. I don't know about you, but I'm infuriated right now. Let's see. Public. There might be a pre-market sector gap up and see if that brings it up. So their own built-in scan doesn't work either. Sort by market cap, maybe their scan nor mine brings up Carvana. That. All right, you guys, let's take a look at the market. As I said this morning, there's been 7 base breakouts this year so far. And the average breakout last 3 days, 1, 2, 3, boom. 1 right there, 1, 2, 1, 2, 3, 1, 2, 3. And then we had one that lasted 5, 1, 2, 3, 4, 5. And then this last one has lasted 1, 2, 3, 4, 5. You can kind of semi-discount the first one though, because it was like a doji at the breakout, very slight. But it counts, so we're either equal to the longest rally run we've had this year, or we're at 4 days into this run. So we're between 4 and 5 days. But what we can say is that the average move is 3.3% on the market. 3.3% on every breakout is the average move, and we've exceeded that already. Now, the longest move that we've had is this 5-day one here, which went 4%, 3.99%, 4%, 3.99%. So far, this base breakout, we've moved to peak 3.87%. So we're basically at the max. We're right here. So I'll be very defensive this morning and be taking profits where you will. The VIX is just zooming right now, so I'm just looking at that. And the dollar is being positive, is being strong. That's helping the market. But the point is, be defensive with your profits and your gains and your capital. We're extended, we're due for some pullback. A lot of the bears think that means, we're extended. When the bears hear extended, they think, oh, crash. No. You don't want to be a bear in a bull market. Extended means we might get a consolidation. And that can come in the form of a correction, a pullback, a base consolidation, a flag, a high tight flag. It can come in all kinds of bullish forms, but they're all bullish. And we're nowhere near in a bear market. To be in a bear market, first we've got to cross over the 50, which we're nowhere near. And secondly, we got to get underneath the 200. And then you're in a bear market. So that's not going to happen till the end of this year at best. If we went down almost every day, starting right now, we wouldn't get there. But we're not in a bear market, we're in a bull market, because it could still bounce off the 200 once it gets there. So don't listen to the bears. You want to continue to be trading what's happening, not what might happen. Trade what's happening. Don't be. I'll save the word I want to use for members for now, but on the public stream, don't be that guy. So it's bull market. You want to be getting into positions, but right now all we're doing is we're making sure that we're taking a lot of our profits and a lot of our capital back off of the table to be ready to push it back in when we've pulled back and at the bottom of a base and we're at established a low end of a base or some kind of a signal. And those signals will show up as stocks, not just in the market, but they'll show up as stock signaling. And right now, yesterday we had less signals, but we had a couple signals. But the signals are going away, and the positions are, some of them being cut. So you just got to pay attention to your rules, and your signals, both exits and entries, will tell you whether or not things are popping or things are over. It's auto adjusts. If you don't have any kind of signaling system like that, you're flying blind, and you probably shouldn't even be trading. And you have to have something that tells you what's going on the market. And I'm talking about signals like on stocks, stock signals more specifically, versus what I'm saying is trading signal. Trading signals. What I'm saying is number of stocks meeting a signal criteria is either high or low, not the signal itself, but to be able to read whether or not there's a plethora of buy signals or a plethora of sell signals. Now, the stocks that you're already in are where you're going to get your sell signals, but the stocks you're not in are where you're going to get your buy signals. And if that starts to dry up and you're getting sell signals, that's going to be just naturally where you want to start to get defensive and be de-risking. Obviously, don't cut anything that's still within the bounds of your swing trade risk, but definitely if it breaks your rules, get out because there's no reason to stay in if it's giving you the signal when the market is topping like this, extended, let's say. That's going to be a true and valid signal to listen to. All right, we got 10 minutes till the market opens. That's where we're at. Prediction-wise, let's see. We've got the VIX moving up, which is positive. It means there could be more to come. We've got the S&P 500 zooming even more. And yesterday, the S&P 500 led the market up, and then the growth market followed later, especially, I guess, on Microsoft news. But we've got pretty much broad rising of the tide across all sectors right now. Some contrary signals are that gold is up a little. Oil and energy are up as well. So inflationaries. And then rates are up a smidge, but they're gapped down, but they're moving up. So they're in uptrend intraday. But that's so just general rising of the tides means it could be an all-day green day. However, at 10 a.m., right around there, 9:50 and 10:15, right around there, 10 a.m. area, 30 minutes after the market opens, we might be peaking out. So that could be the best primo spot for you to take some risk off the table. That's up to you. If you have, let's say 100% size position, right? You take off 50%, take off 25%, take off 75%, whatever you want to do. But de-risking may be the correct action. That'd be if you're watching the market and you're noticing it topping. Then you go over to, ideally, to the sector and the industry charts for the stock you're holding, and you check those healths as well, see if they're topping, and then you go down to your stock and you see if it's topping. If it's signaling get out. If it's not signaling get out, you stay in. But it can be, like I say, a good idea to take something off the table, especially if you got something that you haven't taken profits on and it's very extended. It's like, almost an exhaustion candle or run. Then you want to take some off. So that's what want to be focused on mostly today, is not getting in, is getting out. You want to be highly defensive and preserving your gains that you've achieved by your wise entries, days ago and weeks ago. And then, for a month or a couple of weeks, we might deflate those gains, positions, and in the market, and all stocks may rest and consolidate. Right now, though, Carvana seems to be pretty hot. Let's move over to that. Carvana market looks like this top right chart in the intraday. It was at $36.50 and popped all the way to $60. And $60 seems to be the current resistance level. They moved up their earnings release from when they were going to release earnings. They moved it up. So that's a big surprise in and of itself. And then for it to be a positive surprise as far as their debt and as far as the other metrics. It's been a big surprise, a positive surprise. So it's a surprise on top of a surprise. It's catching a lot of people off guard. This is a heavily shorted stock. So in order for those people to get out, they have to buy to cover. So that's going to add kindling to the fire. And it's a surprise on top of a surprise, and it's a pivot break surprise on top of that. Bottom reversal pivot break, stage one. This moves it directly into a stage two. This is the day, this is the moment that Carvana now moves into a stage two. And whether or not it holds, that remains to be seen, but it's a very high probability that today will be followed up by another update tomorrow. And then it will start to lose momentum, pull back, and create a base and continue to run for the next business cycle, which could be years. So this could be the best price you get Carvana, best price you get Carvana at for a while. It was 360 at the top of the market, and right now it's at $56. Obviously, during the bear market, they did everything they could to increase their efficiency, their margins, their operating margins, their profit margins. And now that the wind is at their back and the economy is showing signs of improvement and their company is showing signs of improvement, and the business cycle begins, they have the ability to go past where they were before, which is 360. So that is an easy possibility at this point. It would take maybe 2 years, but it's there, it's out there for the taking, or it could even take several years. So there's a lot of potential here. All right, and it has a very high ADR, 15% per day. So this is a fast-moving stock. You could just swing trade it in and out for the next few years. You don't even have to hold a core, but you could get some of this for your retirement portfolio if you felt it was the right risk profile. I don't necessarily think it is, but maybe you have a highly diversified retirement portfolio. That'd be fine in that case. Again, I'm not a financial advisor, though. This is for educational purposes. So hope you're enjoying the show. And, your decisions are your decisions. I have no fucking idea about your financial life and whether or not that's a good decision for you or not. I don't know you or your situation personally. Those are your decisions. So I take no responsibility at all for your decisions. All right, we got that out of the way. All right, so we've got 3 minutes or so until the open, I believe. Yes, 3.5 minutes until the open, and we haven't even really covered all the opportunities out there, but those are the big ones. Let me take a quick look at SRT. But Carvana is going to be the kind of catalyst day swing trade entry that we, hunt for, that we stalk. SRT, no, we don't like this one. All right, but we are watching also SMX, which is it got a lot of sketchy movement and has broken down FWAP and not smooth like Carvana at all. Carvana is trading like a dream, to be frank, even though it's not, let's say easy. It's moving smoothly. It's fully tradable, intraday tradable, and then of course we'll see how it goes as far as the day trade, as far as the swing trade goes. Any questions? All right, Darius, if you came a little earlier, I think you would have gotten some benefit. So hopefully you can make it to the live stream a little bit earlier in the future, just in case. It depends on how hard you're going after this. But there was a couple of good points made just before this moment, and I think they've been very helpful. What do you think, guys? Would you rather have just came in just now or have heard what I was just talking about for the last 10 minutes? Pineapple, you got it, Mike. Don't be a pineapple. That's the new word. I love it. Yes. But I'm probably not allowed to say Noriega in that context. Probably not. All right, market's opening in 1 minute and 30 seconds. Darius, 2 p.m. shift changeover. About 100 and 150 kids to look at. Right on, Darius. Okay. Where are you? Are you in England? Whatever you call it. The United Kingdom. Well, which fucking United part are you in? Are you in England? Tell me where you live. Never missed the pre-market show. Birmingham. Beautiful. Lovely. Right on. And I'm guessing you're talking about you teach at a high school or a I don't know, private school? Don't go there. A warehouse. Okay. All right. Very good. Okay, market's going to open here. Let's be on top of this Carvana trade, which is very interesting. Number one, I have to just simply defend my pre-market entry at 52. But we're looking for, if it breaks a 1 minute candle to the top side, that'd be an entry with a stop at the low of the candle. And same thing at 5 minutes. You want to be looking at the 5 minutes. But if that doesn't work out, then we'd be looking for like a 30-minute break or basically a high of the day breakout. And you don't want to be in. You don't want to be in when you're not supposed to be in. All right, here we go. What is it? 6 seconds, 5 seconds away. Here we go. First 60 seconds is going to be interesting on Carvana. Shorts aren't going to do anything for the first minute. They're not going to cover. Not until the actual buying demand steps in. There's some buying demand right there. Let's see how shorts react to that. Okay, a fight is ensuing. I believe real demand is taking over. And we are 20 seconds before the end of the first minute. That first 60-second fight occur. Okay, it looks like sell-off is consensus so far. And there's the first minute. Now, if we break the high of the first minute, that could be an entry. And that is at $55 exactly. And if we break that low that it put in, and you're already in, that'd be a good time to get out. So I'm prepping my order on that end. And then you can re-enter and high a day breakout. Benjamin says, what's better than getting here early in the morning? Is living in Evan's attic and always listening for alerts. Yes, actually, I can hear alerts even in the middle of the night sometimes on my computer system. Okay, we are still within the 1 minute opening range candle, but it's not looking promising. Demand hasn't stepped in. I'm going to get a little sharper shape on it by watching the 10-second chart, but I've got my opening range being drawn there. You can see the green and the red. So I know when I'm getting out of my current position, and you'll know when to get in if you're not in yet. Boom, I'm out. All right, so that was a $35 cost to me. Very, very little risk. It was negligible. So that was worth it, because if it took off, I would have had a good entry. But now perhaps we get a better entry. Now remember, there's also the mega dip buy signal, which is a 5 minute candle signal, and we can be watching those as well. But now we do move to the 5 minute candle, and the break 5 minute candle will be $55. So if we were to break after 5 minutes, the $55 level, or before then actually, that could be, but leaning towards the end of the 5 minute side, that could be a entry signal. All right, moving to other positions. I'm just going to take a look at all my stuff and make sure everything's healthy here. We're now up 53% on Upstart. So I got to take a look and see if it's time to take a little off the top. All right, and the market is flying. I mean, it is flying across the board, and we have 315 new highs versus 33 lows. So that's a 10-to-1 monstrous bullish level of differential there between new highs and new lows. 10-to-1 is more than a dream, more than you could dream of. 4-to-1, 5-to-1 is what you hope for. 10-to-1 is a flaming bull market. But we are actually seeing, I think, some pullback on the Qs, but the S&P 500 and the rest of the market is moving. And yesterday we had that same anomaly. And then around 10 a.m. or 10:30 a.m., about an hour into it, the Qs caught up. I think it was mostly based on Microsoft, though. But the S&P 500 leading, and so is the Dow. So there could be a little bit of rotation going on because the Qs are dropping. Let's go look at the Qs. Qs are putting in a red candle while the S&P 500 is putting in green. You're going to equalize at some point today, but watch your growth positions. I have really nothing to worry about going on. Everything seems to be respecting and movement, leading, if you would. Alto with a little bit of a pullback day. It's on projected low end of day volume, so that'd be a soft pullback. So we're able to babysit that for a little bit longer, although I don't want to give back too much. And I'd like to be able to get out where I need to get out, which would be roughly the 10 moving average on Alto. Although it has bounced in the past twice off of the 20. So overall, I'll stay above the 20. Q's not letting up. That maybe that's being led by Microsoft pulling back. It could be. There's Microsoft pulling back. And then we can check Netflix. Netflix doing fine. Meta is getting a little pullback, but healthy pullback. I think overall we're going to stabilize on the Qs. Could be wrong about that. But all of our positions are behaving. And as I said, though, you should be very defensive with anything that is not working out for you and is of larger size, because the growth market itself is not moving up right now. It is pulling back. All right, back to Carvana. Do we have our signal yet? We do, but it looks like it was a fake out. The $55 entry with a stop at 50-ish, and it's just broken that down. So a lot of volatility on Carvana, and now we're out. The next time we could possibly get in is at $57 signal. Be a high a day breakout, but we're getting volatility expansion. It's interesting. There's just a big fight going on. I imagine there's a similarly equal number of profit takers as there are shorts feeling stuck. And then simultaneously, there are shorts waiting all that out. And there's actual demand coming in. So you have a 4-pronged fight going on in Carvana, and that's why we're seeing expansion and volatility. It's just coming from both sides. Dips are being bought, pops are being sold, pops are being covered, and dips are being sold as well. So it's everything. It's an epic battle on Carvana. And we're up 27% on AFRM. Having a very good day. AFRM is leading. And it looks like the NASDAQ is now doing what I said, which is coming off of the bottom, and it's coming off quite strongly. About 45% strong, 40% stronger than it was dropping. So that's a strong shift in momentum to the upside, and could definitely set in that as a bottom for a while. but it could even lead to continuation and leading, and at this point, getting back on track with the rest of the market. And basically, every other sector is moving up. We had a very similar, strange anomaly yesterday, where the incomplete rising of the tides across the board, but not in growth. And then all of a sudden, midday, growth came back on board. I would say the 10-to-1 differential going on between new highs and new lows, market breadth, is a strong indicator that today is going to be green all day. But I'm still very defensive and ready to, I'm babysitting all my positions, and especially babysitting anything that's full size or at the highest risk levels. Looks like Beyond today. Well, I'll check it out, Ben. Marcus just said Carvana. I gotta take a look at that. No signal on Carvana. Maybe that was, that was the 5-minute breakout. No, it didn't work out. So I'm just taking a quick look at Beyond, and wow, Ben, I really expected this to be bullshit. But you're making me really proud. It really goes to show your potential, Ben. I'm very proud of you. That is indeed an entry signal on Beyond. All right, stop to the low of the day. It's your 1670. It's at 1750-ish, so it's about 75 cents of risk. So 75 cents of risk entry on Beyond, BYND. Now, it is on, it's a pocket pivot, so that's a professional entry on Beyond. So we'll take it. And that should give us about a 30 to 50% probability of it working out, which is great. Considering the risk reward, we'll probably get a ton of reward out of it if it works out. Beyond. I guess they figured out how to make money when they don't make money. So good on them, whatever's going on there. Selling their. Here's what my wife says. It's a good point. If you don't eat meat, why not, right? It's because, maybe you feel so for dietary reasons, right? But then why would you pretend to eat meat? Like, if you like meat, what are you doing? I mean, these got to be like the ultra. I'm not even going to go into it because I'm on the live stream, but these people are not moderates. Let's put it that way. My wife just sent me a video of a parrot that woke her up this morning. She's visiting her parents in Central America. Let me see what it sounds like. I don't know if it's going to make it so you can't hear it, but I want to hear it. That's not the parrot. That's my wife. But she is a parrot. Oh. Hello. Say something, bird. Hello. Damn, it was your moment in the spotlight, and you couldn't do it. Funny. All right, and the Qs did what I thought. They caught up. They are now tapping highs. The growth market's now tapping highs. And this is a very dangerous spot. We are very extended. We are the most extended. This is the most extended rally we've had all year. This is the most extended rally these last 5 days we've had in 2 years. This is it. So if you're not defensive now and taking profits and defending your gains, when are you going to be? All right, let's see. She's got another audio here. Let me see. Okay, she's going to send me some clip of the bird making sounds, and then I'm going to bring it over to the live stream, and we're going to watch, I believe, or listen to a Central American parrot being a bastard. All right, checking through all my positions, and then we're going to go through and check if there's any entries on anything else other than Carvana this morning. What is Carvana doing? Carvana is trying to find bottom. We do not have a 5-minute entry signal going on in Carvana, but once we do, that'd be your entry signal. Stop at the low of the 5-minute candle, or the lower of the prior candle. Depends on how you want to play it. It's totally at discretion, up to you. Up to your discretion. Yeah, and ADR has increased from 14.85% ADR in Carvana. Now today it registers as 15.02%. So definitely volatility is increasing on Carvana. And so reliability goes down when that happens. The VIX is moving sharply down, up rather, which means that hedging is occurring. Which means this market extension is starting to get hedged. And just checking on some of my shorts, AAOI being one of them. AOI, if it can get over 885, becomes a long entry, a bounce over the 10 EMA, a bounce reclaim. That's if we can get on AAOI over 880. Let's see the exact number. Close, open rather, 880. 880 is the key number there, with hot ignition happening at 9:15. All right, we got in taste yesterday. That was I think a reclaim signal, a pullback entry. Let me see. Yeah, and it has taken off, so that's a beauty. And it is above ADR. So now we're just going to watch the pivots and VWAP, and going to hold on and potentially take profits by the end of the day on that, since it's an extreme day. We're going to take 50% profits and convert to runner anytime that it breaks pivot or VWAP. Take it. Also, VRM is another one we're in, and we're up 15% on that this morning. That was a signal yesterday. Has opened higher, but is pulling back. And that does need to be babysat a little bit because we're getting projected higher end of day volume potentially on that. That could be a strong selling going on versus a soft. Could be a strong pullback versus a soft pullback. Still, we're way above our break even. And then UIHC taking off a little bit. Okay, from our entry, looking good. I like where it's at. Hasn't hit ADR yet. Some of our new positions holding, like CCL and JetBlue, just holding there. Hyper looks like it's not happening. That we needed some follow through on Hyper yesterday. And no, that's not the follow through we're looking for. So we just go ahead and get out. And luckily the risk to stop was so wide and wisely set that we got out for about half of expected stop, just by its behavior alone. Your stop is your last resort, your last line of defense. Your stop is your last resort, your last line of defense. There's at least 20 or 30 reasons why to sell before then. ICAD, the same. I'm going to go ahead and get rid of it. It's doing all right, but it's just not the kind of follow through I'm hoping for. Well, let me double check how much it's pulled back on us here, and then I'll decide to keep it or not. 1/3 to our stop. That's too much. I'm happy to get out. I can always get back in again. That's how you got to think. A lot of trading is defending your gains, defending your positions, defending your losses, defending against losses, taking, cutting, taking losses. A lot of winning trading is all about managing your losers. Certainly should be what you master in your first year. All right, back to Carvana. Let's not lose sight of Carvana. Okay, I believe that is a signal on Carvana. Let me take a look. 5-minute candle. Wrong graph. 5-minute candles. That is a signal on Carvana. There we go. Entry signal on Carvana at 50.50. It's right now stop to 48. Interestingly enough, that's the exact same risk that I got in earlier on. The risk calculation. The amount of risk hasn't changed. Risk to stop. The volatility seems to be staying the same now, which is somewhat of an improvement since it was getting worse. All right, so from here, we might have a bottom on Carvana, and that can lead to a positive movement from here on out. I had an entry at 52, but now I've got it at 50, so that's even better. 51. I'm basically in where I got out, but I removed risk from the trade by getting out and then being able to get back in. That's a situation you want to be in. I wouldn't recommend trading unless you had full day trade ability, which requires a minimum of $25,000 account for U.S. People, and then for internationally, you don't have to worry about that, but you might have to worry about commissions. And the market, the Qs, the growth market, moving solidly down to lows of the day again, while the VIX is moving the other way and indicating hedges are being released. So these dips, I suppose, are indicating that they're being bought up. And again, we have excellent breadth on the market, massively bullish breadth, and that can come from leaders that aren't even showing up. That could be coming from new leaders that will be added to the Qs and added to the S&P 500 in the quarters to come. This is why you have to be constantly sifting for and looking at potential new leaders. Are we in Root? Yes, we are. We're in Root. Root is having an outstanding day today. Second best on our hot list. Carvana being the number one. We're up 15% on Root. What was our entry yesterday? Was it yesterday? We got it at 10.78. It's at 12.34 on Root. And it has not hit ADR yet. It's 18% would be the level for a full ADR. Checking the trades on that, we did get in on the 17th, 2 days ago, on this beautiful reclaim signal. I mean, it's just that what an entry that is. That is like a maverick entry right there. Just a beautiful. If you were to look at this chart and then say where is a good spot to get in, it would be obviously down here before. Which I do believe we did get in, and then it came back down and we took out at break even. But then we had the reclaim, and that was a signal. And man, that's a hell of a lot better than a cheat breakout, which is happening right now on a pocket pivot, which is your typical high growth IBD style entries at best. Those are the best entries you can get IBD style, which would have been at 1150. Our signal was at 1040. Actually, it might have even been lower, around 10. Let me see. Well, we got in at 1078. I did anyway. And then you have a second inner pivot break here, and then finally the full cup and handle or 52-week high breakout at 1485. And that would be a signal one of the latest signals. So we're in way at the bottom, looking absolutely pretty en route. Not there yet on AAOI, where I would reverse my position. It was a short, but it may be coming along. Okay, AFRM is respecting VWAP. We're way up on that this morning. We're at 50. What are we at on AFRM? 29% gains on AFRM. We're at 55% gains on Upstart. That's the next one down. So we're in that one as well. This is our hot list of about 300 opportunities, 300 stocks we're watching. The best performing of them we're in. So congratulations on that. Carvana continues to put in a bottom. Next up is Taste. We're in that. That's the 5th best performing stock in our entire universe of 300 plus hot stocks. And we're in them. We're in those. We're in one, two. We've been in 1, 2, 3, 4 out of the top 5, and that's not including Carvana though. Carvana, that's in a league of its own today. But we're way up on Taste. Where are we at on Taste? Taste. 8% gains on Taste. I don't see VRM on this at the top of the list, but VRM is doing well as well, and we're in VRM. Oh, it's just having a little bit of a red day. This is why. But we're doing well because it gapped way up open, and it just sort of has been pulling back. This is the one we're looking at babysitting a little bit, but we're at 15% gains on VRM. For anybody out there listening, if you want to come join our group, you just have to click the link in the bio, click the link in the profile, click the link at the bottom of the thing, click the link wherever you are. Click the link. Clink. Let me see here. Did we get in VRM yesterday or the day before? We might have got in late yesterday, which is still on the pullback. No, it was the day before. Absolutely awesome entry. That would have been on the reclaim of the 10 moving average. What a beautiful entry. And we're up 14% on that. Couldn't have asked for a better entry. Anything beyond that would have been a guess. Would have been gambling. No, but we had actual signal that demand was coming in, and we got on board for the sentiment reversal. Continuing down the list, we got Lemonade. Do we take some profits on that and still have that position? Or possibly I'm not in it. Some of you, I think, are in that one. Lemonade, LMND. It has been taken off. I think I missed the beautiful signals on those. Which would have been the last signal on that would have been at 1663. It's now at almost 23, and that's on the week in a week and a half. That would have been incredible gains. 22.28 divided by 1660. You're looking at 34% gains in a week. Alto and shut off to what's up and shot off Alto. All right, let's go look. We doubled up on Alto the other day. There was a double up signal. Okay, that's fine. It's bounced off the 5. Other than being defensive today, there's no reason to touch it. Other than that reason to be defensive with your capital, and be watching the market to decide how defensive or how much risk you leave yourself hanging in the wind. I'm going to take a quick look at ICAD to see if it's reclaimed any of its pullback. That was an entry we went on and then we got out. No, it hasn't. So that was the right decision. Carnival Cruise Lines obviously has been doing outstanding. That's a very hot stock, but with only about a 5% ADR. So that could give you maybe 2% per day when it's rallying. We're in. It gave a signal 2 days ago. We're in it. And then so, but it seems to be facing, consolidating still. It's lying, but it's doing good. UPST flying, yeah. Take a look at our JetBlue entry. That looks good. JetBlue actually starting to bounce right now. And yesterday we got in at 8:31. It's at 8:45 right now, so it's starting to take off finally. JetBlue taking off. That's pullback entry, so an absolutely excellent low risk, high reward entry. All right, what's Carvana up to? Let's take a quick look over there. Carvana's grinding up off of those lows. That's what we want. We're up 2.5% since 5-minute entry. 5-minute green over red entry. Around minute, what was it, 15 on the market? All right, we're closing, and here we are. We're at the top of the hour now. It's 10 a.m. Eastern. And so this can typically be a high or a very important price level, and or the highs and the lows, or the low or the high of the day on whatever stock and whatever index may be set. So like over on SPY, that might be it. On the S&P 500. Over on the Qs, we're sitting right in the middle of a range. Both those levels, one of them, it's hard to say which one, may be the permanent level on the day. Whether it's the low or the high remains to be seen. Probably the high, because we're extended 5 days. This is like the most extended we've been in off of base in years on the market. So my guess is we're going down, and you're going to have to guard your profits. You can use VWAP kind of as the line in the sand on the day. Mara, we're up 53% on. Mara was at 17 yesterday. Today, or I believe, no, yesterday it was at 1675. Today it hit 18. We've been even better than that. That's a runner we have. And we're also looking potentially to take some profits on Taste, which is one of our larger, fresher positions. Your fresh positions at full size that haven't been converted to runners, those are the ones you want to be very defensive about. We're getting some short squeeze action going on Carvana, making shorts very nervous. And at some point, that's going to cause demand to have FOMO, and you're going to get both working in conjunction with each other. FOMO and fear from shorts and short covering, throwing kindling on the fire. That could happen if it could break the opening price, and it could certainly happen if it would break the high of the market day, high of the market hours on Carvana. The growth market, the Qs are now sitting sort of dead center in the range on the day. And Upstart just hit a new high. Upstart now at 58% gains in the group since our entry. That's a runner. The kind of profit I'd be looking to take on that would be anywhere between 5 and 50%. That's completely up to you. But there's absolutely no reason why to eliminate it. Although there would be nothing wrong with that. It's just if you've already got the runner, then your trade is subsidized by your original 50% profits you've taken between 0 and 5 days of entry many weeks ago, whenever you started your Upstart position. So there's really no reason to completely get out. It's already subsidized. The risk is already subsidized. I am going to go through more opportunities here, but mostly I'm looking to mitigate risk today, on a day like today. And basically, as far as my shorts go, AAOI is the only one we're still looking to see whether or not to flip on. It did give a signal to flip, actually, a couple minutes ago while I wasn't watching, but it's pulling back now to the point in which that is being called into question. But if it does not, break down, then I'm probably going to flip on AAOI, and that'll be a reclaim entry signal for everybody on AAOI long, maybe in the next few minutes. Okay, there's AFRM breaking down, and Mara breaking down. Those are take profit points at these extreme highs. I will take 5% on my runners on those. Just a very small take profit with intention to hold the rest of the runner that has been subsidized for the next business cycle, which could be years, unless it breaks down the an important moving average, say the 5, 10, 20, or 50. But that's not the situation right now. They are up, but they're very extended up. And so we take a little profits, take a little off the top. AFRM, next one on the chopping block for a little bit of profit taking. They're doing really well, super well on a super well day, on a day which is questionably probably the top for a while. That kind of extension is a nice target day to take a little. You'll probably get an add-on in the next few months or next few weeks. So you're going to wind up adding on more than you're taking now anyway. Part of the rinsing process. Upstart also, same issue there, falling below VWAP slightly. So I take back 5%. What was the next thing here? Taste just keeps going, however. So good on Taste, and that's a core position. That's a fresh position, rather. It's not a runner. It's a full-sized position. Actually, it's a smaller size because it was gotten at a extension point as an entry, not at a pullback. At a pullback, an excellent pullback point in the market and in the industry sector and on the stock, you'd be able to put in a much larger position. But right now, you got to play it very cautiously. Now is the time to be already in trades and be, your biggest problem is taking profits, not entries. I'm just sort of talking out loud on some of that, teaching you something. Evolve, we can get out. It's a good thing I put a huge amount of risk on that, very wide. I'm getting out for like minus 0.3 of my risk. So excellent risk management on that one. Basically didn't get even a bruise. No cuts, no bruises. PCT giving back 50% of the gains that we had on it. That's a fresh position. It could be looked at. We got in on the reclaim at about 1080. Let me see. PCT entry was trade price 1078. So it's already halfway back to that point. I'm going to go ahead and take it right there, based on lack of continuation. I'm seeing it already put in a topping tail candle. So you just take your money back. If the market was raging, I'd just let it float up with the rest of the tide. But this is a great time to trim anything not looking amazing, especially if it's a fresh position and a larger amount of capital. How many of you are getting the sense for the idea that your trades are very dependent on what the market is doing? Say I am or yes. And if that's a new revelation for you, definitely say yes. If it's something that you're finding to be true and you've noticed for a long time now, say amen. So are you going to trade in a vacuum from now on, or are you going to be constantly watching the markets and the sectors and the industries and all that to be guiding the size of your risks and your positions and whether or not, it's a huge part, right? Right. Oprah stock, OPRA, giving back about 20%. No, 20% of our gains, 20% of our gains being given back on Oprah today, but that's not too bad. You still midday and certainly end of day will have a lot more information to go on. If you just took a break, just monitor the beginning of the day, up until now, the first hour, and then took a break, came back at the end of the day, whatever the end of the day said as a signal, that could be just fine. Looks like CCL is still floundering around the 10, a little bit above our entry. I'm going to go ahead and take off CCL now. I mean, it just hasn't taken off, and I don't want to have anything extended on this market that isn't taking off. So I'm going to go ahead and close CCL, even though it's doing well, and that is at a profit. Near break even, but yeah, it was at a profit. So I got a free swing, a free handle pull on the, what do you call them, slot machines. The market's having a very hard time getting above WAP across the board, the growth market. But the S&P 500 and value stocks are doing fine. The VIX, however, is showing strong hedging going on. I want to heed that and definitely be taking profits and be taking risk off the table, which is what I'm doing. I'm not leaving on anything that's just not doing anything. It's not a good idea from here. It needed more padding than that, more cushion. I need things to be doing what they're supposed to be doing. AMTX, I'm getting out right now. Similar deal. At a profit. Just hasn't really taken off. We're extended on the market. It's going to pull back. You know, if something's going to be a leader, it's going to have to act like it. IonQ, how many days have we been in that trade? 17, today's 19th. 2 days we've been in that. IonQ, we got an entry at IonQ 1414, which is way down here on the 10 moving average reclaim. What a beautiful entry. Way to be on top of things. Patting myself on the back. That's an excellent entry. I don't need to touch this position. I'm willing to risk it. You know, we have so much room before it even gets back to break even. Let's give it those 0 to 5 days of gestation, and if we do get a high ADR day, you know, to the green side, then we'll take some profits on that day, our first 50%, and convert to a runner. Is everybody following me? Well, DMAC not following through, cutting. I'm taking that off my cutting back. That's a fully fresh position with lack of follow through on a day which is petering out on us after a 5-day historic run. You know, multi-year, unparalleled, multi-day base breakout run on the market. So we're now pulling back. It means, you know, we're potentially at the top, and it's time to take risk off the table, as I keep saying. So I'm looking for where to do that in myself, and sizing down, and what would you say, protecting my capital that's at the most risk. Obviously, what's doing well, I don't need to touch, unless it's giving back exceptional amount of gains. Obviously, doing well, you know, we're looking to take that 5% off of runners, or 50% off of fresh positions. AFRM is even bouncing a little bit, but it does need to make it over VWAP, which probably is unlikely the way the market's moving in Upstart as well. Upstart and AFRM both over VWAP, but not necessarily trending over it. So, you know, it's probably a good decision where we took 5% out. Let's see what else. Redfin. He's got that with me. Let's take a look at that. What's your name? Are you in here? Are you in the live? The person who's called Imtiaz, IMTaz, IMTaz. Are you in the live right now with me? Say hello. Redfin looks like it's pulled back all the way to our entry. Oh, we'll just sit here and babysit it from here. It'll bounce on the 10. Last time it really bounced kind of near the 20. So we could end up giving a lot back here over the next few days, which I'm not super interested in having happen. So we're definitely babysitting that today. Redfin. Nail, the home builders, only giving back about 6% of gains. That's excellent. That's really nice. So Nail continues to be strong. And that's the 3X bullish home builders and supplies ETF. That's a high tight flag on a recent 30% move. We're up 20% on that. I guess that person is not here. So what they wanted to know was about D-Dog, my analysis on D-Dog. And he says he or she has strike for this week. I'm presuming they mean calls. And earnings was coming up? No, I don't. Earnings is coming up. All right, continuing to look through. There's anything that's giving back some gains today. GRBK, we're up 12% on. It's giving back 15% of our gains today. Not ideal, but not bad. IoT, giving back about 10% of our gains today. We're up 7% on that IoT. That's looking healthy. Semiconductor index leveraged SOXL ETF, SOXL, 3x SOXL, 3x semiconductor leveraged ETF. That is giving back about 20% of our gains today, but still quite healthy, moving along the 5 moving average. Very nice. If it cuts through the 5 moving average, babysit it and potentially cut it, take your profits. Because that's what it tends to run on. All right. Upstart now 57% gains, AFRM 29% gains. AI is doing very well as well. We might be able to take some profits on that. Let's take a look. AI has been trending up above WAP on the intraday. Broke new highs on the day. Is moving up and it is at a cup and handle cheat entry pivot point. Right now, it's got about 9% ADR. We're already in it. We've already taken 50% profits. This swing trade is subsidized. We are up 17%, which is 2 ADR. And basically, we're just crossing our fingers to see if this breakout makes it a move up to $50, which from our entry of $36 would be 37% gains. If it does make some stellar moves, we'll take 5% off. We're up 51% on Mara. We got 20% more gains going on Forge. Things are looking good. The market just did a reclaim off the bottom. Still hasn't multi-point pivot over VWAP though on intraday. So it's still bearish intraday and having a hard time. But the rest of the market is doing outstanding. And again, breadth is very high. New highs to new lows. It's at a 10 differential. And but the VIX indicating that there's a lot of hedging going on. There's a lot of safety being created out there. Looks like possibly AOI might be indicating to flip to the long now. Let's see. Yeah, time to cut short on AOI and go long. That's a beautiful reclaim on AOI. Stop to the low of the day, which is 775. It's currently at like 880, which is about $1. I now cut my, I buy to cover my short and then buy more to now obtain a position long. Boom. Welcoming to managing a long short portfolio. That into my fresh swings, and that is on a pullback entry, which is the best entry you could potentially get. So if it doesn't work out here, you can't complain about anything. Best it gets. Let me see where I got to categorize UIHC. That's currently not categorized in my portfolio. Oh man, that is just absolutely gorgeous. I would almost add on here if it made sense, if I could get a cost average below 4. No, that's not where we're at. But man, is that a gorgeous bottom reversal trend break over the 10 and 20 moving averages. Coming into the 50 should be a little bit of resistance at 485, maybe for a couple of days, and then a continuation up to 520, where it might consolidate for a while and then eventually move to $7 and continue on. This is looking great. UIHC, we're in that one. And I guess beyond just not really doing much. Beyond comprehension, why? The meatless meat company. For people who love to devour chickens and devour cows, but would rather eat healthy. I mean, this is fucking. I'm just saying, these are not moderates. All right, now we're going to put, okay, Carvana and beyond. Those are fresh positions today. Carvana is not working out. Let me go take a look at that. That was our 5-minute entry on Carvana. Yeah, Carvana not following through, but, and it is kind of bouncing off at the bottom of WAP. Just chop around. Yeah, certainly just watch your stop on Carvana, 47.60. But this could be a base. A base. Redfin nailed, Greenback, SDGR, giving back about 5% of our gains. No big deal there. Soxel doing just fine. Vera giving back 33% of our gains on our runner, but it's actually not really moving much, so that's just probably a consolidation area. Let's take a look. Vera, yeah, just a consolidation area. It's moving along. It's trekking along. Yeah, it's starting to pick up. It's now above all the moving averages, which is excellent. Days like these, want to allocate shorts. The market is extended. Continue to find shorts to hedge short. Bearish stocks. Some of the best ones are the ones that are down massively today, and they used to be running. Those are ones that are going to take many days to get out of for institutions. So we go our hot list. Percent change losers. Biggest one is tossed, not taste, tossed. And this one was high flying recently. So this is a perfect candidate, and I will short that. Now, the point in which to put your risk at on that is 24.70. It's at like 23, so $1.70 of risk. Short 58 shares. If it lets me, we'll see if it's available. So the short sale restriction might be on. Sell 58 shares. I ideally want to be delta neutral, which means I want to have as much short as I have long. Okay, good. It let me in. All right, we're short tossed. Kiwi, KWE. Let's see what's going on there. Not quite the catalyst state of the downside that I'm looking for, but it certainly does look like a stock that's having a really hard time. Very low priced. That puts it at a pretty high risk. I would have liked a higher price on that. Here's one, ABL at 575. And this one's just dropping like a ton of lead. I don't think you can get short on that, though. That looks like that's probably a SPAC IPO. ABL, probably NTB. It's HTB. I probably can't get any shares, but I'll give it a try. 650 would be the stop. It's at 575, so 0.75 of risk. So I can short 125 shares. I don't think I'm going to get it. Let's see what happens. Now, it says shares are not currently available, even though it's hard to borrow, not none to borrow, and I'm in the hard to borrow program. Joby, ideally we're looking for stocks that have been on a wonderful run, and then today are having a cataclysmic shift and change to the downside. That's the ideal. And this one is definitely not it. In fact, this might reclaim today or tomorrow and be a long. ESLR, too little information. 3 days. What are you going to do with 3 days? And it's the momentum slowing. No. BPTS, no. Check, no. OMC, a very high price stock, so that's nice. It is having a 600% RVOL, a negative day, but it has found support so far at the 200. It is a prior bullish stock, but it just looks like it's not enough, even at 600 RVOL and a 10% drop. It's just not enough to be nosedive it. GP, this is doing fine, really. This is a recent Catalyst Day long. Snacks at 700% RVOL to the downside, 9% to the downside, 2 days in a row now, doing very poorly, but it's at a support level. Too risky to add as a short, you see. It's very hard to find shorts. Well, at least new, fresh ones. It's also, in a great market, it's hard to find shorts, good shorts, bearish positions, stocks that just continue to go down, and aren't subject to good days. Yeah, there's really nothing else in that particular scan. Let's check this one called percent range losers, which I don't understand what the difference is, to be honest. On Trading View, I don't know what they're trying to say. But on this one, let's take percent range losers. It won't let me sort by the percent change column. That's kind of strange. None of the columns. In fact, maybe there's an alert. That's strange. ABL, let's just pop that up. Okay, that's the one I think I just shorted. And then, yes, big one was check. We already looked at it. 15 KWE, Kiwi, we already looked at it. Possibly got in that one. CLSR, we already looked at it. All right, there's a lot of the same ones on this list. Gap losers, let's see that one. OMC, I'm not sure if we looked at that one. Yeah, we did. We talked about it. IPG, not enough drop. CMO, not really. SAMO on CMO. CLSR, a lot of these are coming up the same. Percent gap losers. OMC, TOS, CLSR, IPG. Not sure if we looked at that. Possibly we just did. Looking for bigger. Joby. We talked about that. That's possibly at a support bounce level. If not now, maybe tomorrow it will be. It's not worth the risk going short. Okay, that's it on those particular lists. Like AT&T is having a nice little reclaim bounce day today. It's kind of meaningless though. Oh, Nikola. Well, does anybody get into Nikola? There was some entry a couple days ago. Yesterday was basically kind of a green over red type of entry at 230. Did anybody get into Nikola? Yeah, it's having some continuation. That's nice. Lucid looks like an entry today, if not back at $7. It's $7.50, and then it might be making a run to break $8.30, and then get and go on a bullish run. Lucid LCID. Today, a sketchy day to get in things, get in small. Stop at 7, basically. 7 would be fine. And it's at 750, so 50 cents of risk. I don't have high expectations. We're extended on the market. This will be a lagging moment, for Lucid. Needed to be doing this earlier, but sometimes that's just the timing of very bullish stocks, and they just rotate into having their good breakout moment on bad days. And then you never quite know from there, but it could be worth the risk. But you certainly want to risk small, the way the market is. The market is telling you to risk small, not the stock. I got -6. I got almost -7 deltas from that tossed entry, moving that into my shorts now. That puts me at a total of -26 delta, and I need 220 negative deltas to balance out my 220 positive deltas. But I am cutting, a lot of positions defensively here. I'm getting my longs down, but I need far more shorts, and lots more shorts. I'm not willing to size up on these shorts. I need to risk more. Oprah is now giving back 50% of our gains, just not following through, and continues to make lower lows. I'm going to go ahead and cut it, and we'll get another signal sometime in the future. I'm cutting it at a 5% gain. Okay, so that's an example of how you can exit a trade for it not working out at a stop loss that's actually positive. You kind of a discretionary reason why to get out. It's not at a loss, and yet this is essentially, to me, getting out of a trade that's not working at a loss, and yet it's at a gain. So that's why if you defend your positions rigorously, you could potentially get near 0% or even a positive return out of all of your stop losses on your stop side. You're exiting of trades that are going against you. That was a trade that went against me that I exited at a 5% gain, which means basically in the long run you're getting free. You're even getting paid to take risks. That's the importance of being extremely aggressive with your fresh entries. Because you create basically no risk to the downside on your portfolio, on your capital management. Good capital management. Of course, there is risk there. Of course, if you're exposed, there's total exposure risk. But with proper good mitigation and risk management on a day-to-day basis, that as at bay as possible. The VIX continues to move down, so there continues to be hedging going on, and that tells me that we've likely topped in the market, and the SP 500 is now put in a head and shoulder. Beginnings of it, and everything's breaking down now at the top, at a top level. Everything's breaking down now. I believe that's it. This is the end of the run. So I'm going to call the session right now, the live stream, and I'm going to work for the rest of the day on continuing to find short positions to hedge my short side deltas. And obviously, I'm going to babysit anything pulling back. All right, good luck to everybody. Smoke them if you got them. See you in the trading group. See you in the